Okay, yes. So we are live both on our webinar platform and also on our YouTube channel. So hello everyone, welcome to the webinar. For the viewers that are watching us right now on the YouTube, if you would like to ask question to our speakers, please register to the webinar platform by the link you see in the stream description. And today we discuss the digital strategy. How it should be designed, how it should be implemented to be effective. My name is Olena Gryniuk. I'm your host today, and my guests today are Ruehmer and Bharath Kumar, co-founders at Q-Lana. Hello, Christian and Bharath, and welcome.
Hello, thank you.
Before we start and before we go to the topic, let me mention very shortly organizational information. So we plan to have our webinar for 45 minutes. We are recording this webinar, so right after we finish, you will receive the link to the video and presentation as well. And we start from the presentation, and after we finish, we will be ready to answer your questions. So please type your questions into the chat, even during the presentation, and then we will be ready to answer. Digital strategies. Let me show you very quickly what is the current state of the digitalization in the CE region. This is precisely the digitalization of banking services for the SME and business customers. So what we have as of now is that 80% of the banks implemented and digitalized daily banking operations. This is like checking of the history or the balance of the current account, also doing the transfers in local currency and foreign currency. 60% of the banks implemented in their digital channels such modules as foreign currency exchange modules. 30% of the banks have implemented digital customer onboarding. We are talking on the business and SME customers. And 10% of the banks and financial companies in the region implemented fully digital and paperless lending processes. So this is what we have as of now, and in the next part of the webinar, we will discuss how to digitalize processes, why, and how to do this effectively. Also, I wanted to share with you snapshots from a digital strategy from the ING Bank in Poland. I mean, in general, what we see in the CE region that there is no such a separate document as digital strategy. Usually banks do it as a part of their general strategy. And here I wanted just to highlight two or several targets, let's say, which ING Bank in Poland is setting in the digital part of the strategy. And just to mention that this is the bank here in the whole Central Eastern Europe region that actually has digitalized almost all the processes for all the segments, including individual customers, SMEs, and corporations as well. And their next target, what they published till 2024, is, for example, the increasing of the percentage of mobile first individual customers from 82% to 95%, also increasing the personalization of the offer from 40% to 45%. And for the business customers, which here you can see that ING Business is the online platform and online banking for business customers, which is used by 92% of the customers, and a slight increase is planned during the next 2 years. The full strategy is generally almost of all the banks you can find on the bank's website, as this is a publicly available information. So, Kristen and Bharath, I'm ready to pass over to you to start from the beginning. Actually, you're welcome.
Good. Let me just share my screen, please. Thank you, everyone, for joining the presentation, and thank you for for Olena for setting this up and for making the introduction. We will present here the Q-Lana digitization strategy. My name is Christian Ruehmer. I am the co-founder of Q-Lana, responsible for the strategy, business development, risk management, advisory. I've worked over the last 30 years in financial services, worked with over 100 institutions, and everything that we do in Q-Lana is basically is founded on my experience of working with SME banks, with corporate banks, with retail banks, as well as with microfinance institutions. On my side, I have Bharath Kumar, who is the also co-founder of Q-Lana and a board member. He's also the managing partner of Threshold Software in Hyderabad, who is responsible for the development of the Q-Lana platform. And you see us here jointly presenting at a conference briefly before the pandemic, actually in India. Q-Lana is founded by 3 partners in 2016. We have currently 6 permanent staff members in New York and Kigali in Rwanda, and our development teams at the partner company Threshold in Hyderabad. We digitize financial institutions, starting with lending and credit resource management activities, because we think this is a core function of those institutions. We use a flexible low-code platform, which makes digitization an agile tool to continuously adjust. So you're not purchasing a complete software, but you're basically purchasing the ability to really develop and expand your digitization efforts over time. And we also see that one of our strengths is that we work with financial institutions in the development and implementation of digitization strategies, both the overall strategy as well as individual components, as you will later see, such as reporting or rating or other components that are essential and are useful once you have your processes digitized. Our mission is to strengthen financial institutions through the focus on knowledge-based lending while emphasizing the human aspects of digitization. So as a starting point, of course, you all know that digitization of financial services is necessary. We all have to do that. We are threatened by fintechs who are grabbing market share. We are threatened by complex regulation and demanding clients. And we've seen traditional financial institutions falling behind, even though the last couple of weeks already showed that there will be a certain market clearance, that some of these fintech companies will demonstrate that they don't actually have the financial strength. They don't have the capacity to work in the way that we assume. So therefore, it will turn a little bit the tides. But nevertheless, fintechs show us how digital banking could be done. However, very often we see that financial institutions just have a fear of missing out when it comes to digital innovation and simply just react with short-sighted activities. This leads to partial digitization solutions, uncoordinated efforts to collaborate with fintech providers, and then you come up with a really unsustainable patchwork approach of digital banking. The result is expensive, unintegrated solutions, and you certainly have the risk that you irritate and demotivate your staff as well. At the same time, we also realize that traditional banks have a key strength that's often neglected, which is the long-lasting client relationships. You have the clients. You might not have the technology, but you as banks, as financial institutions working with clients, you have what fintech is missing, long-lasting client relationships built on trust and experience. You have proprietary, qualitative, and quantitative knowledge about the clients. Nobody knows your clients better than you do. That's an opportunity, especially as we are heading into crisis mode. That's an opportunity in which you need to build on, and which you can do if you start smart digitization to improve efficiency, risk management, and speed. This will help you really getting stronger. What we like to warn everybody is to go into digitization without a strategy. And let me show you what I mean with these 2 pictures. On the left side, you see an old bicycle. Traditional financial institutions have a successful business model. You're basically servicing your clients with a bicycle. You have strong customer relationships. You have knowledge and experience. And this bicycle is working. You can get everywhere you want to be. You can reach all the clients. You can service your clients. Now, if you move to digitization, suddenly you get a high-tech car. You have much more opportunities. But before you get there, you have to answer a couple of questions before you digitize. You need to know, what is it actually that makes your financial institution strong? What do the clients really expect from you? How inefficient are your operations and why are they inefficient? What are the aspects that are weak and need improvements? And maybe who are my digitalization partners? You also need to figure out, do you like to give up existing business, or can you build your digital strategy on your existing business? And how much time do you have? Because when you start developing a digital tool, you're buying this fancy car, this fancy that you can migrate from the bicycle to the car. Suddenly you can go to different destination, you can drive to different places, but do you really want to drive to a different place? Maybe your client isn't where you want to be. Do you have enough money where to maintain this car, to pay the maintenance for this car and the power for this car? Because the bicycle was extremely cost efficient. Your digital strategy might be expensive because you have to buy tablets, you have to buy computers, you have to buy lots of technology. Can you really afford that for the clients that you have? And we have enough people who know how to drive the car. I mean, and you have such a fancy car, you need to make sure that there are enough people not just to stand there and admire the car, but really take advantage of the skills and of the things that this car offers to you. So before we get to this all part, we really need to define our digitalization strategy to make sure that whatever you invest in, whatever you develop, whatever you build is really coming organically supporting your existing business, helping you to do business better. The components of a digitalization strategy for me are to really understand the value of qualitative and quantitative knowledge about your customers, your sectors, and your markets. No competitor shall know your clients better than you. No competitor shall know better the opportunities and the risks that are in your sector. You still need a strong customer focus, and that means you might have multiple channels of interactions. A client might apply for a loan online, or a client might come to the branches where human interaction might be necessary. If a client has an expansion of his business, he doesn't want to go online, he wants to speak to somebody. If a client wants to finance a mortgage, maybe he wants to talk to a relationship manager. So the staff who uses your technology will be your asset to create business opportunities, because frequently we see, oh, stuff is just too expensive, we need to reduce stuff, we need to be more efficient. Well, maybe you just need to reassign the staff to more interesting activities. Same thing for branches. You have branches all over, they might be expensive unless you use them as business centers, as offices where the staff who works with clients can be hosted. And the next part is that your digital platform needs to adjust to the needs and characters of the institution. You need to have a platform that allows you to go digital, but not limit you in your ways how you develop your digital strategy, not just in the first couple of years, but over a longer period of time. So without dropping your core values of proximity, you need to make sure that you allow your business to grow by having a digital strategy. At the same time, we at Q-Lana think that your best platform provider should also serve as an advisor, should help you with a well thought out digitalization strategy, offers doors to new products, new better analytics, advanced risk management. This is really key because in this combination, you start actually not just investing into digital, but you immediately start harvesting the benefits by taking advantage of the new data that you have, of the new technology that you have, and use and develop things that are really useful for your business. For us, SME banking has 4 areas where you are really strong, which is first of all the qualitative information. Nobody has better qualitative information about your business than your client, than you as an SME bank. You have information about the performance of clients, which fintechs don't have yet because you've worked with the clients for a long time. This performance data is in your core banking software. It might not be accessible easily, but if you use the right approach, you can download, you can analyze, and you can take this data for your benefit. Another thing that's really essential where SME banking is really useful is monitoring and early warning systems. For most of us, we focus in lending on the assessment, analysis, disbursement. We spend not enough time in monitoring and early warning systems. If I talk to a loan officer and ask him what is his riskiest clients, he tells me about a client that is 60 days in arrears. A client that is 60 days in arrears is not risk, it's a problem. Risk is the client who pays today but doesn't pay tomorrow. Figuring out whose client is at risk requires a good monitoring and early warning system strategy. and digital banking or digital platforms can help you implementing that. But it still requires human interaction. And finally, the other strength is your implementation, making sure that your stuff integrates, your stuff follows this digital mindset, even if it takes years. So you need to have a strategy that really works well for those employees, that you don't miss out on them because they really are your strength. I'd like to give you a brief example here to show you digitization as a journey, where we say the first step that we usually recommend is to just start with digitizing your existing operations. Derive from that some learnings, some insights, and then only once you're comfortable with that, you can develop and add advanced versions, other technologies, other parts, other products. I'd like to show this to you on the example of Bank of Kigali, one of the clients of Q-Lana. We started working with them in 2018. In the first step, we digitized SME and corporates just from the acquisition to the approval. Then thereafter, we added to that disbursement and monitoring. But we were already able to build on the experience, have the users testing the platform with acquisition and to approval stages, later on disperse, integrate into monitoring. Then in 2020, we worked with them and developed a quick platform called Q-Connect, which helped them during the lockdown, because during the lockdown, the first couple of weeks, most of the clients didn't even know their internet passwords. So we had a platform that allowed them to communicate quickly with clients and non-clients. Then in 2021, the bank decided to change their core banking software, and the National Bank required some reporting. So we integrated that. And we just started to integrate recovery as well as a process. Now, going forward, we will start developing retail banking and think about in 2023 to develop new tools that allow, for example, clients to do some accounting online and then use the data for the bank for assessment of clients. So you see here, we use the phased approach to slowly accommodate the customer, the bank, to the world of digital banking, and also make sure that the employees, the staff, can learn, can work, and suddenly become really familiar with the platform. And to be honest, now at this stage, become our greatest source of ideas how to develop the platform further. We don't have to think for them. They, because they see the benefits of the digital platform, now become a source of great information about what to do next, how to do the digitization better, and really get excited about that, as opposed to be at the beginning where they were very negative because they feared the digitization would take away their jobs. So here, a phased introduction was really extremely useful. If you look at Q-Lana, we try to be extremely flexible in the ways we offer our platform, so that we can really accommodate to any kind of client, any kind of service, any kind of workflow that you have. We have flexibility. So I can tell you, for example, we had one client who had a loan approval process of more than 400 steps, and we were able to replicate all those 400 steps on the platform. Nevertheless, while we are flexible, we rely on a certain basic structure. And as you can see on the screen, we're using 5 main databases. One is for individuals called Contacts, where we track information about individuals, such as their education, their marital status, number of children, their personal financials, and so on, KYC information. We have company information, where we track on every business, their products, their history, their balance sheets, and so on. We have facility information, loan facilities, where we track information that's at some stage also in core banking, but we track more information, such as, for example, the payment schedules, such as information about valuation, IFRS 9 valuation, and we also track information on collateral. Finally, we have a project database. Project for us is the workflow, how to approve or how to ship one transaction to the workflow. So when you see those databases on the left side, in the middle, you can see that we package together a company, like a borrower, together with a contact, could be a guarantor, could be the owner of a company, into a project, which is one or more facilities, maybe collateralized, maybe not, and ship them through the workflow. Based on this database structure, we can create input forms that are flexible. We can create assessment forms, questionnaires. We can build calculated forms that help us, such as, for example, the rating. We can create reports, summaries, and dashboards to flexibly build all the information that you like to see. When you see this on the screen, again, the same part, We can then add workflows. We can add an unlimited amount of workflows to the platform. For example, one that you see here that goes through sourcing, screening, due diligence, pre-disbursement, and monitoring. But we can build other workflows, and the steps between workflows could be approvals. Could be, for example, a committee approval, could be an individual approval, or could be an approval based on a score that can be calculated. We have, in addition, the flexibility to do collateral management, pre-disbursement monitoring, financial analysis. We can track hatching of funding transactions. We can do monitoring. We can provide the external login, reporting, valuation, as well as a whole document and knowledge management section. Especially in the knowledge management, we think it's extremely useful that if you have, for example, a loan officer who is analyzing a bakery for the first time, he can go into the system and look at other bakery loans, see what else the institution has done to really track this information better, and in this way, really make better analysis. In addition, as I mentioned in the introduction, we are offering advisory approach. So basically, the team of Q-Lana works on additional tools that can be used in your institution. I give you a couple of examples. What we did recently, we developed and implemented for a client the methodology for the valuation of larger loans under IFRS 9. We designed an ICAP report and used the data that is generated by Q-Lana for the ICAP report. We developed the entire lending process for an impact investment fund. We use the data for developing rating and scoring methodologies in the rating and scoring engine. We did for a client a COVID stress testing of the loan portfolio, and then use the data to establish that platform, that methodology. We developed early warning systems for monitoring, including covenant monitoring and the traffic light system. We advise on the best practice for risk management reporting, and all these other parts that are really useful for you to not just have a digitization platform, but really improve the business using that data. I'm skipping through this for the purpose of time, just to show you that we can integrate in every step of the approval process. We can help you improving in every step. We can help you doing things better, or training your staff either online or in person, or through a digitized training program to really use the platform and become better step by step. The Q-Lana platform allows you really to do all these things, such as a multi-channel access, efficiency management, risk management, knowledge management, collaboration, collateral document management, and reporting. And based on that, we can develop ideas together. For example, we can think about a multi-level scoring. We can think about lending limits per borrower to define risk appetite. We can think about integrating external data or other areas to really organically develop the digitalization in your institution. At this stage, I'd like to ask my colleague Bharath to briefly introduce the platform that we use for the design, to show you how easy it is to really develop and integrate Q-Lana into your operations. Bharath, if you may share.
Thanks, Christian. So before I start sharing the screen and start showing you the application, let me just... So we always believed banking and technology had one thing in common, which is what the problem only starts after you deliver a loan. Problem only starts after you deliver a software. Which is kind of very constant. So the technology is ever changing, ever evolving, and you can't have one right strategy that can fit for 5 years or 10 years. So by the time you launch your software, so you would figure out that you would need more functionalities, you would need more features. Trying to adopt a standard stack might not really help in terms of what can be achieved. So in order for us to be prepared and be more agile, so we use a low code platform called Zero Code. So let me start sharing my screen.
You have some issues? Yes, now it works. Okay.
Right. So this is one of the Q-Lana sample application. Okay, so the from an interface standpoint, it would look like most of the standard applications. So let me just enter the username and password. So I've already logged in. So the session got expired. So you would have all kinds of standard security features that you would need, and probably more as well. Okay. So let me, so here is a list of loans that I can see, and probably let me open one of the loans. This is a sample application for a microfinance um, a loan. So there are multiple stages in this loan application, and there are different kinds of information that we're trying to collect. So under loan application, we're collecting client information, business information, and then in the evaluation process, there is a lot more data that we're collecting. Okay, so all of this is built through what we call as a zero code development kit. So this is how the development kit looks like. Let me open one page in this application. So here is a page called client information. Let me open that page called client information for you and just show you how it looks like. So this is the client information page. Okay, I can simply, whatever fields that I require, whatever data sets that I require, I can simply drag and drop them and start setting up various properties of each of this. So if somebody understands how web development works or how a basic technology would work, they'll be able to relate to it very, very easily. Okay. So the one of the biggest advantages of using a low code platform like zero coders, you'll have a very clear understanding of everything that you need. Okay, there's nothing to hide as such. Say for example, in this loan origination application, I can see all the modules that are there. I can see all the pages. There are about 30 pages in this application, and then there are 10 tables which are created. I get to see all the APIs, um, all the processes that we have built for this, any workflows that have been built, any background jobs or schedulers that are there. So at any given instant of time, you'll get to know the exact state of your application. So let's open that same client information page again. So in this client information page, I can get to see what is being exactly used, like the tables that are used, the APIs that are used, processes. We maintain a very detailed history of this particular page as well. So a lot of things are taken care by default, which is normally most of we as a developers, which we overlook. All of those things are taken care by default within the system itself. Okay, so there are various builders. There are builders for API management. There are builders for page management. So one of the builder that I've showed you, just that I'm showing you right now, is called a page builder. So with which is what I would build my pages. So depending upon the type of field that I'm choosing, I would get to see a different kinds of features. So let me open this particular page called appraisals. Uh, Let me just open this page and show you as well how it looks like. So here's the appraisals page. This is a simple grid that I'm using here. I click on this grid, then automatically I get to see all kinds of features which are a part of the page. We've been continuously upgrading lot of functionality onto zero code itself. This is the latest version or the new version of zero code, which Q-Lana is currently using. And the functionality is a lot more simpler, a lot more easier. I can start building stuff very, very quickly with the elements. Let's say if I want to build a list, I can simply generate it from an existing database. I can simply select a contact management. So what I'm doing right now is I'm trying to build a list uh, from one specific table called contact management. Okay, I'm done. So it automatically created the entire list, and I can simply go ahead and preview this page. So for us to do in a standard technology without worrying about anything, this will take at least a few hours to few days, depending upon the expertise of the developer. So with zero code, as Christian mentioned, with Q-Lana, you can start with something very simple, but you can extend it to various kinds of services. So this is one of the things that you're seeing on the screen is a ticket management application. So which records all kinds of tickets. It can be internal, external. The tickets can be raised through an email or through social media or through a third-party applications. Okay, I can get to see how many tickets are there, um, what are those tickets, and I can get onto the details. So the platform provides you the flexibility to extend from where you are to where you want to be. Okay, so Q-Lana doesn't limit your imagination only with credit management or with a rating or majorly with your core business, but you can start innovating yourselves with the underlying low code platform, and all of this can be managed by your teams as well. If you have a dedicated resource, they can be trained on the platform and they can start uh, updating, uh, rolling out new applications as such. So Christian, you want me to add anything here?
I think we're good so far. Thank you very much for Bharath. Just to conclude here briefly, as Bharath has shown to you, some of the applications are that we have in Q-Lana. This was more for a smaller institution. Just want to show you we also have applications or screens for larger institutions. They get a little bit more complex. So the user interface really depends on the complexity of your institution. We can create contracts out of that, but that's just a brief overview of what is possible. I'd like to just finalize and then hand over to Olena again for the questions. Is that we also think about implementation. We use a phased implementation in which we really assess what is necessary together with the client, configure and customize, and then have an on-site deployment. But also make sure that in the implementation support, when we talk about communication, training, data quality, and rollout planning, that you're not left alone, because this is really essential from my perspective to make a digitization strategy successful. It's not that you just purchase a car or a tool or a digitization platform. It is that you build something that organically helps your institution doing business better. You're not digitizing because everybody digitizes. You're digitizing because you want to do better business, and this is the reason why you are working, and this is the reason why you are deploying digital banking. And based on that, you should make sure that you really have something that makes most sense for you. Olena, I hand over to you. Thank you
Yes,
for that part, and then let's see. Take it from here.
thank you, Christian and Bharat. We do have questions on the platform. So first, and we have several actually from Karim. Thank you very much for your activity. So first, is a digital platform only as good as the quality of loans on the platform? I would like to ask this in regards of MFI business.
Right, and I see a second question from Kalim as well. I
Yes,
think that relates to
it's
the
great.
first question as well. Yes. So look, only because you're digital, it doesn't mean that your clients are better clients. That's for sure. However, what I see always as a risk manager, you have two types of risks. You have the avoidable mistakes and the unavoidable risks. As a bank, as a financial institution, you are getting paid for taking risks. What you want to do is you want to eliminate as much as possible all the avoidable mistakes. If you have a traditional process, or if you have a process in which your staff is not engaged in analyzing because they just need to fill out a digital form or they just need to fill out a paper, then they don't assess the risk well. By having a platform that is interactive, where you can group the information in small pieces, where you can work with your staff to improve the quality, so that they don't write 5 pages of loan application. They write half a page, but each sentence makes sense. Then, of course, you can improve the quality of your portfolio because you can exclude better, you can analyze better, you can make better decisions. In this way, you can hopefully filter out the bad clients better. That's even before you start developing a rating or scoring. Rating and scoring can come on top of that as a decision support or as a monitoring support. But first of all, the use of a interactive digital platform, whether this being Q-Lana or somebody else, the interactivity, working with your staff on getting better credits or doing your analysis better, that's what makes your portfolio better.
And one more question from Colleen was about is it advisable for MFI to switch to a ready-made platform like Q-Lana or develop something in themselves? And I would add to the question, what is your opinion and also advice when it is better to digitalize processes or part of the processes in-house and
Mhm.
when it makes sense to cooperate?
Right. So I'm a little bit selfish here, saying that I would always work with an experienced partner, unless you have the comfort or you are certain that you have all the skills in house. I think
Mm-hmm.
what is sometimes a problem, specifically on MFIs, is that they get a patchwork of consultants here and there, and then one says this and the other one says that, and everybody follows. One day the consultant says go west, and everybody runs west. The next consultant says no, it's better on the east side, so everybody runs to the east side. That might be a problem. I think you should not hand over the responsibility of digitization to a consultant or to a company. You should still be in the driver's seat because it's your institution, but you should work with a selected partner to make sure that the best practice from outside the institution is integrated. You can still decide which components you take or don't take, but I would certainly work with a partner. You can always develop software yourself, but frankly, you're a bank or you're a financial institution. You're not a software developer. So, yes, of course, when I started my career, I also did some VBA applications that worked well as long as I was doing them. But you need to build something that, even if the staff who builds it leaves, can continue. And that's a critical part, and that's a critical importance. For me as well, for example, if I develop a rating module, I will first develop the rating module in Excel up until I'm comfortable, and then I translate that into the Q-Lana platform. But only afterwards, to make sure that in a way that if I'm leaving an institution, my successors can continue the work.
Mm-hmm. Yeah, thank you, Christian. We have a comment from Jovan that CRM comes in when it comes to analyzing large chunks of client data and converting it into valuable information. Yes, and also I will add here my question because I always have a lot of actually this. I mean, digital transformation is very much about data and data analysis, and this snapshot that I showed from ING Bank's digital strategy for the next 2 years is about personalization of the offer, and this is all about data analysis and centralizing data, making an organization data centric. So
Yes,
no comment.
I get it. And I apologize that based on my training, I'm always reverting back to risk, not because I see risk as something dangerous, because I really think that you are in the business of taking risk. I see if you
Mhm.
offer a client, if you offer a client additional different product, a different loan, it's for me to offering him a different risk package. So I'm as much talking about risk as I talk about business development. So the data that you collect, of course, that helps you making better risk decisions, but also deciding on what next product to offer the client or what really makes sense to the client. And I'm far away from this approach to say, or let's push it from a sales perspective. We need to sell 50 loans, 20 mortgages, and so on, but really work with the client to say, okay, here's your financial plan. Here's how you should grow. Here are the loans you need, and here are the products you don't need. Here
Exactly.
is here's an offer maybe from a fintech that might sound attractive,
Mm-hmm.
but you know what? If you default on this fintech loan, who is there to work with you? Yeah, because especially as we're heading into a crisis, you or as you've seen also in the pandemic, you need to have the proximity to the client to help clients out. Not every client who misses a payment is a bad client. And all these things are relevant as information that comes out of CRM, both in a qualitative way and in a quantitative way. Quantitative data you can analyze. There are enough data scientists out there who can make a judgment whether a married 50-year-old person with two children is a better borrower than an 18-year-old first-time borrower. That's data. But the assessment to say, okay, I've spoken with this client. I trust him because I saw where the problems are. He has been shown me his order books and so on. This is qualitative information that's extremely important out of CRM, and making sure you track it in the same way I said before about development. So that, for example, if one day one of your relationship managers, an experienced relationship manager for 20 years working with your institution, decides to quit or to retire, that information is not lost, but you can still build your experience using this data that has been digitized because it's been collected, so the next person can take over. I'm not saying that every client will stay with you. If your best loan officer decides to work for another bank, he will probably take a couple of clients, but at least you have a chance. Right now, if you don't have this knowledge, you have no chance at all because you have nothing about the existing clients who are working with your loan officer.
Yeah, yeah, but I probably will comment here a bit. That's what we notice, and my feeling is that, I mean, being also, I'm started from being a relationship manager at the branch, at the bank branch. My feeling that now, especially micro customers, maybe SME and larger corporates, are more loyal to the organizations and to the relationship managers, but the smaller customer is kind of business size, the less loyalty is here. So we should be prepared to the market that customers are becoming less and less loyal. And this usage of the data is that, I'm dreaming about the situation when I will get an offer which is really in the context of my business, that nobody will call me and offer an equipment which I don't need in my business because I don't produce anything, but just having my data and my even invoicing data, even my accounting data in one bank, and having centralized this, I will be receiving really offers that are connected to my business.
Absolutely.
Yeah.
I get this very well, and I see that there's a lot of value in business generation. I'd also just like to again point out that you're talking about the good days. Yeah. The problem is the bad days. Yeah. I can service
Yeah.
anybody can service you on good days. But who is there for you on bad days? Let's say your main client defaults, doesn't pay you. You need a overdraft to make payroll the next 2 months. The fintech who doesn't know you is not there for you. Your bank is you need to have those who also are there when things are not going so well. When you really need to say, okay, yes, you know what, I'll be able to pay this in 2 months because I have another client coming in, but for 2 months I need help. And you need then help at approximately the same rate like it's offered, and not at some exorbitant rate because you get penalized. I know it's always difficult to look at at the rainy days if all you see is the sunny days, and I really agree with you that a good relationship manager also tells you which loans you don't need, which products you don't need, which insurance you need, and which insurance you don't need, because that's really giving you an advice, yeah, that understands your business. And data can certainly help here, but the relationship is also important because it understands your characteristics. I know it takes time, and this loyalty that we don't see from clients, we're kind of enforcing it as well as banks because we're also not offering a career path as loan officer or a career path as relationship manager. This is a stage. Yeah, you service a couple of customers and you don't do that, you don't build that, but something gets lost here. Yeah, I know this is a little bit the zeitgeist that we're going in this direction, but I'm talking to a financial institution which has this quality, which has this long-term relationship. And before you move to replicate a fintech, you should probably think about the idea whether it is worthwhile maintaining that knowledge, maintaining that experience. There's a good reason why, for example, in Germany, where I grew up, cooperative banks have 60% of market shares in micro and SMEs because of that proximity, because they work, because the relationship manager works for 5, 10, 15 years in the same area and takes pride of the economic development of an area. Yeah? I know it's not fashionable, but maybe it comes back again.
Well, I hope, because I mean, what we have seen in the C region, then when the COVID started, then actually banks restricted their credit policies at once, and micros and SME became undercovered with finance again. So, I do uh, hope that this relationship will be working not only for bigger customers, which banks are doing now mainly. Okay, we are actually running out of time of the webinar, but my last question to close it. We have seen not only here in the region, I think it was a general trend that several years ago banks started the digital transformation from the front end, showing the customers that they have digital processes, that it looks good. But then when came to a certain extent of the capacity or number of applications received via the digital channels, etc., it came to the question that actually back office also should be transformed, let's say, and automated somehow. Of course, when this is a fintech and they can and you can start from the scratch creating their core system, more than maybe modular, which is also now a trend, core system, then it is easier. But what is your advice for the banks that probably cannot start this digital transformation simultaneously on back office and front office and on the lines? What is your suggestion? What is the right way to start from?
Right. You're right. I've seen a lot of fintechs who just had a front office, a front end, and the back, everything was Excel or Google spreadsheets. And they were talking about hundreds of thousands of data points. And in the end, it was the owner or founder who made the loan decisions at night because nobody else was there anymore. Yeah. So
Mhm.
that's typical. I still think, and yeah, we've shown the example of Bank of Kigali in my presentation, you should make sure that your basic process, your backbone, assess acquisition, application, assessment, approval, that is digitized.
Mhm.
And you can use the traditional process for that because that process remains always the same. You can then latch on your digital products. You can make certain decisions by scoring. You can make a scoring which says declined or proceed. You don't have to approve immediately by scoring, but you can build on this backbone a whole lot of things. Introducing the backbone is a thing of a couple of months. You then add, you maybe use the most common product. Then you add more products to that. But on this way, you collect also experience, and most importantly, you get the buy-in from your staff. And that's really important because we've seen staff being extremely resistant to modifications because first of all, they fear that their job goes away. But if you work with them for a couple of months, they do the second, the third loan for the same customer, suddenly they get excited. They say, hey, it's actually much easier. I have more time to really work on a client. I don't
Mhm.
have to invent 40 pages of loan applications. I can do 3 pages and have more time to service the client better. That is
Mhm.
part of the communication package that you need to have there as well. But that's really where I think you need to start at the backbone and then add more products as they come in, collaborate with fintechs maybe, take over a fintech and some front end, whatever. But that's more useful. I also know, and this maybe just for the roundup here as well, that these things take time. You don't make a digitization decision in a day or in a week.
Exactly.
That's
Yeah.
something where Bharath and myself and the entire team of Q-Lana, we're talking to clients, we're talking to prospects a lot. Please note, we are always here to advise, to speak, to recommend, because there is so much um, knowledge that needs to be before a decision is being made, don't be shy, reach out. We are here to really share our experience and work with you. And Olena, we work for a couple of years right now. We will be
Yeah,
at the conference in the fall as well,
exactly.
to really talk about this. Yeah.
Yeah. Thank you very much. Thank you very much, Kristen and Bharat. Thank you very much to our attendees for your active participation. Thank you, and see you next time online during our next webinars and in person at the conference which Kristen mentioned on November 25th in Prague. So thank you very much and see you next time. Goodbye.
Thank you.